In all of these things, we tend to go into new trading ranges, and there's a price discovery process about going into a new trading range. And you've seen it in many commodities, you've seen it in oil and things over the years. And so people test the upside, and then it comes down again and tests the downside, and you end up with a consolidation at a new price level. You know, if gold manages to hold $3,000 an ounce for 2025, gold companies will make a fantastic amount of money. You know, the gold funds that we run that are focused on the equities, you know, should do pretty well in that environment. They're already up 40%
until you get
year-to-date
margin calls across the board and everyone liquidates gold, which is what happened 2 weeks ago with the stock market.
Yeah, I think that was more a function of a rush for cash. It was a de-risking that was going on in the market. It wasn't a negative on gold as such. Everything got sold. What was interesting is if you go back to, say, 2008, gold got sold off massively from August through to November. Huge, and there was huge collapse in the market. Gold, you know, if you blinked, you missed the fall in gold last week. You know, it was pretty short. So that tells you that there's this underlying activity. The China news earlier this week about China increasing the quotas to allow more domestic buying of gold. Now, they wouldn't be doing that if they thought the gold market was going to go into some kind of crazy territory and would damage domestic investors. So, you know, you kind of put it all together and you look at gold relative to the cost of production, gold relative to its purchasing power. I don't know whether you guys have seen the data around the iPhone. Yeah, so when the iPhone was launched 16 years ago, it cost about $500 to buy an iPhone. You know, if you said, well, how much gold would it cost to buy an iPhone back 16 years ago, it would be a certain amount of gold, about 0.28 of an ounce. An iPhone today, the new iPhone, is about $1,500 an ounce. So it's gone up 3 times, and these fabulous banknotes that really look after your purchasing power through time. In gold, it costs you 30% less gold today to buy today's iPhone. So what has been the better way of storing your wealth and preserving your purchasing power through time? And I think young people today are learning, painfully, this lesson around the devaluation of paper currencies. And you look at, you know, U.S. government debt going to new highs. I mean, you could talk about new highs in U.S. government debt and new highs in the gold price in the same sentence. And you look at it around the world, the servicing cost of this, the higher rates. And what brought the U.S. government back to heel last week was the move in the bond markets. You know, and, you know, the servicing of this huge debt mountain.